All right, good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Happy CPI Wednesday. Hopefully, that's a holiday you all celebrate back at home. And hopefully, right, we have a strong, profitable, and successful trading day here today. Theme of the day for me here is don't be an idiot, right? And that's like just self imposed. Don't take any trades that you shouldn't take. Don't feel like you need to rush into entries if things aren't absolutely perfect, and focus on the variables you can't control. When I'm thinking back about my trading there a little bit yesterday, I don't necessarily feel like I broke any rules or anything along those lines, or over traded or anything along that sort of realm. Just felt like I maybe rushed into a few entries just a little bit, right? And ended up chasing maybe the win more than I should have. And that ultimately ended up costing me a little bit of money. Not the end of the world, right? Still well within my max loss number. Went 0 for 2. It happens, right? Still lost relatively in control, but just a little bit, just thinking back yesterday, I was a little bit exhausted with the price action, I think, to a certain extent, and allowed that to influence some of my decision making. So today, really focusing on, being present, being in the moment, being zen, cool, calm, collected, or as best of a version that I have of those variables. And hopefully, right, we get a little bit of volatility here this week, or we cap off or start the week off with a bit more volatility, as it's been relatively sticky and choppy and challenging here so far. So it's okay, right? We talk about all the time how every trader loses. Everyone has red days. Everyone has moments where they're going to be disappointed in their own decision-making processes. And truth be told, if that's the worst I trade, right, if that's the worst case scenario, if I lose $1,100, that's the worst thing that can happen to my account. Then long term, I'm probably putting myself in situations where I'm ultimately going to still be successful. And so it's all about understanding that trading is a long-term game, not a short-term game. I'm not living and dying with each day. I'm playing for, the week-to-week, the month-to-month, the year-to-year return. And sometimes, right, that variance feels more personal than it actually is. From a personal level, September is never an easy month, right? It's a historically very challenging month to trade, and I've got some, maybe predisposition, right, to wanna fade markets here a little bit more, as historically markets want to sell off in September. And I've talked about this in the past, but when things get slow, things get choppy, things get sticky, my bias is to want to go short. And so just being aware of that, right? Being aware that, hey, sometimes fading a slow market isn't the right move. I think ultimately just acknowledging that should make things a little bit easier here this morning. So looking forward to a good bounce back day here, guys. Woke up excited, motivated, and ready to go. So with that being said, let's start mapping things out, figure out what we want to do here this AM, and let's absolutely crush today's session. So good morning, Suresh, Sarah, Bergs, Tasha, Salstein, Craig, Devin, Jeff, Bug, Steven, Daniel, Jose, Dustin, Brian, Samuel, Jen, Mike, Topher, Derek, Gary, Randall, Ben, Emil, Howell, Nate, Juan, and Ryan. Hope you guys are all having yourselves a strong start to the AM. And yeah, looking forward to today's trading session. Oh, I should also mention, right, today we're going to be doing that first kind of group coaching call here post-stream. We're going to do it inside YouTube and set things up that way. If it is just on the same live stream link for convenience, potentially what we might do in the future here is a group Zoom call. And we'll see if we can maybe set that up here going forward. But we'll test it out and figure out what the ideal flow is here for that. So once the quote-unquote trading day is done, we'll do, happy to answer through any questions, walk through anything, and do my best to explain trading from a technical side of things as best as I can. So hopefully you guys are excited for that. And yeah, with that being said, let's start mapping things out. So first things first, right? Economic calendar here for September 11th. We had CPI come out this morning. Okay, nothing too crazy. I got the hiccups here this AM. Not sure what that means. We've got crude oil inventories here at 10:30. So again, something to be maybe a little bit aware of, just to be kind of cautious about that. Could get a little bit of a algo flush when that occurs. So we'll have to just be a little bit aware. But yeah, let's see how the day shapes up here, guys. I'm excited. Good morning, Tanja. So yeah, guys, what's the count here on ES? Let's start there. And yeah, let's figure it out. And then, we're also getting closer and closer to the futures roll, right? So there's a part of me here that is debating taking Friday and Monday off. Good morning, Sheila. Simply because it's going to be very, very untradeable as we switch over from the September contract to the December contract. And so, if it's just going to be a chop day, I'd rather, maybe go, take a little bit of time off, maybe do some traveling, something along those lines. So I'll figure that out here today. I've reached out to this is TMI, but I've reached out from my lawyer to see if I can expense a trip to the States here to go view some offices. I might end up doing that. And if I do get the all clear, that'll likely be the plan. So, crude inventories will impact NQ and the S&P. Historically, right, strong oil equals strong market, weak oil equals weak market. So we will get like a little bit of a correlation trade associated with that, or at the very least, right, there'll be a little bit of a call it volume influx, right, potentially, right, at that time frame. So we'll see if that ends up coming together. Good morning, Chaz. And yeah, Dustin, you nailed it, right? 2 out of 3 here to the upside without volume. So just like yesterday, we continue to have flexibility in both directions. And this hasn't exactly been a banner week from a volume perspective. We'll talk about that a little bit more in NQ here in a second, but it does continue to give us some flexibility. And then to the downside, we're going to be starting 54.70, right? We're just adding one level here. And then to the upside, we're pretty much mapped out fine. We're at 54.10 or 55.10, I should say. So we'll call it 55.20, 55.10 should be mapped out by that opening range indicator. And then we can kind of go from there. No real questions. Make sense? All right, cool. All right, NQ, what's the count here? So this one's a little bit of a trickier one. 532 versus 528 from a volume standard. So it is a technical 3 for 3 here to the upside, but the volume is insignificant, right? Insignificantly higher. So I'm still going to maintain a little bit of flexibility here. Had we cleared above, say, that 19,000 level on that increasing volume, then I think I'd have a slightly different narrative. But I'm willing to have a little bit of flexibility here, as we're going to call that like a negligible difference, right, in sort of the volume standard. So we'll call it a 3 out of 3 here to the upside with barely increasing vol. So I will have some flexibility in both directions. Now, what that also means, though, right, is I'm going to need to apply a stricter standard from a volume perspective for the downside case, right? So I need to see more volume than what we saw yesterday if we're going to be bearish. We don't necessarily need to see more volume if we're going to be bullish. Does that make sense? So I'm just going to differentiate that a little bit, right? So to the downside, we need more volume than yesterday's open. To the upside, we don't necessarily need that. We just need a good element of, we'll call it continuation. Hey, good morning, Jeremy. And then to the upside, still targeting that 19,000. So not too much is changing there from our levels perspective. And then to the downside, again, we're just adding one level here, 18.7. And we're continuing to consolidate inside this Friday range. So, we would expect bears to want to defend this $19,000 level or 19,000 level. I would say dollars for some reason. And it wouldn't be surprising for us to get a rejection, right, inside this box, right, or inside that circle, because we've seen that happen before. So I want to maintain just a little bit of that flexibility if it does happen, but we just got to make sure that we get an impressive volume oomph, right, before we're willing to chase anything here to the downside. All right, CL, 2 out of 3 here. We're going to mark down crude inventories. All right, and then we're going to be targeting a move. That means what, 65.20. Good morning, Herschel. So 65.20 here to the downside with that volume, right? That's very much outlier. Very hard for me to have a bull case here. And again, I'm more starting to map out crude these days as just like a shiny object to look at versus being very optimistic or keen to trade this. I still feel like I get plenty of action, plenty of opportunities on all my other tickers. So, you know, initially introduced crude so I can get a few more looks when we were trading a slightly, we'll call it more conservative approach, right? And this is allowing me to have, I mean, I feel like I'm getting plenty of trades here recently, so I don't feel like I need more, or I don't need to necessarily add more tickers. So yeah, more just for eye candy perspective, right? If that makes sense. Oh yeah, sorry, 2 out of 3 to the downside. Apologies. Thank you, Emil. Good morning, David. And then we're going 64.50, 64, 63.50, 63. Cool. All right, Apple. Doji-ish, right? 2 out of 3 to the upside. Made a higher high, made a higher low. So bullish characteristics, but not exactly a strong candle. If bulls were strong, why couldn't they hold above that 2 out of 3 high, right? So we could still look for some flexibility here. That 222 breakout still going to be the zone. And then to the downside, right, it's under 216.50. All right, Tesla. What's the count here? So it's a 2 out of 3 with volume, right? So we're looking for a continuation narrative. Again, that rejection on Friday, not nearly as aggressive or assertive, maybe is the better term, as we have on the index level, right? Because it's on decreasing volume. So we've got less evidence, essentially, that bears are super strong here at these highs. Although contextually, right, with that Thursday rejection, pseudo rejection, right, and then that big bearish engulfing candle, we would expect them to potentially try to defend this gap again. Right, there's a little bit of a gap here. May as well draw this out. So there's like that gap in that gray box. So I'd probably want to get up and over that, right? If I'm going to be bullish, we'll call it a 236 pop. And then to the downside, we'll say NA. All right, Microsoft. 3 for 3 here to the upside. And we're looking for, what was that, 417 breakout here towards 420. Nice. And then NA to the downside, right? Clear indication that bulls are in control. Increasing outlier volume. So certainly seems like it's got a little bit of juice there. All right, Amazon. Same story, right? Increasing outlier volume. Gap up, right? 3 for 3 here to the upside. So we're looking for a 181 breakout here today, or dip buy off of 180. And then NA here to the downside. Good morning, Kenneth. All right, AMD. What's the count? How do we feel about this gap? right? Just the one thing here, just the size of that gap's a little bit big, right? So oftentimes gaps love to get filled, and they love to get filled within the first 24 hours quite often. So let's see if we can get that enthusiasm to show up here this morning. Fill that gap. If we find support, maybe off of this like 143 area, that could give us a nice catalyst then for a big move higher on like a red to green reversal. All right, NVIDIA, right? 2 out of 3 here to the upside without volume. And so we're still looking for that 110 breakout or right now a pop under 105. And again, right, we've got evidence of basically just being above us being rejections, right? So high wiki candle, big selling pressure there on the 3rd. So it wouldn't be surprising, right, to see bears defend that area again, because we've seen that happen in the past. All right, Meta. First really red candle we've seen here so far today, but it's a 1 out of 3, right? Red candle decreasing volume gap up. So still looking for that breakout above this trend line. In this case, we'll call it a 515 now. And then to the downside, looking for a breakdown under basically this this Friday low. So not much changing there. All right, Netflix continues to consolidate inside this pattern. Maybe starting to get too big to call this a bull flag, but maybe like a bit of a wedge pattern here at this point. So still looking for a resolution of this quote-unquote indecision. So not too much is changing here, right? A breakout above 688 gives us space towards the upper end of that pattern. A breakdown under, right, 662 gives us an invalidation, which would give us an opportunity for now trending PA. Again, we're going to call this a 1 out of 3 here, right? Red candle decreasing volume gap up. So we do have flexibility in both directions. And then Google, inside bar here, interesting. So we do have flexibility. Again, we'd like to invalidate previous highs. So that's got to be above 153.60. And then to the downside, right, we'll call it a 147. Cool. And then VIX selling off here away from these 20 handles right now at 18.32. So still relatively volatile compared to what we saw in like June, May, things along those lines. But yeah, maybe a little bit of fear is leaving the market. We'll see how that reacts. Again, if we expect, if we see, you know, market sell off here today, we'd probably think the VIX climbs back up above or towards 20. If we see markets pumping higher here today, we probably see it get under 18. So we do have a little bit of confluence there, right, as a signal. And yeah, let's see how basically things shape up. If we were to give the market like a general theme here today, like a general bias, how would we describe it? Any thoughts? Yeah, bullish, but kind of like weak bullish, right, across the board, where we've got some evidence that maybe bulls could be like crawling or scratching at a trend day here, but we want to see that enthusiasm show up with some gusto, right? And then from there, we can look to take advantage of whatever momentum is in play. But we're also bullish going into spots where we've seen bears reject before. So we've got flexibility in both directions here this morning, and hopefully, right, that gives us a good tradable opportunity here today. There's not been many great tradable ops here yet so far this week. So again, it's please, let's not get tunnel vision here. Let's not hyper obsess over something. Let's not force something that isn't there, and let's build up some nice P&L here for the week. But yeah, any questions here, team? Anything you guys want to go over? We kind of powered through that relatively quickly here. This week has been smoother on a prep standard, right? Just because we haven't had to make many changes. So, any questions? Anything we want to go over? All right, fantastic, guys. So I'm going to go make myself a cup of coffee, spend a few minutes here getting my mind right and setting myself up for a successful trading day. And then we'll do a quick little rundown here in about 5 minutes and just get ourselves ready for a big one. So looking forward to it, guys. Let's see where that volatility shows up, and let's crush today's market. All right, guys. So let's do a little rundown here before the session starts, right? Yes, we've got weak trending price action here to the upside into a spot where we've seen bears basically step in and reject. So we want to make sure that we're getting a very consistent narrative here if we're going to be trusting any bull case, right? And obviously a very consistent narrative if we're going to be trusting a bear case. Generally at these points of interest, right, you get a little bit of a fight. So maybe it takes us a bit of time to find the correct direction of the day. And that's been the theme we've seen here recently, right, in the September market, where we have to wait a little bit, right, for the direction to be clear. So again, right, let's make sure that we're not getting tunnel vision too early. Similar story on NQ, but a slightly stronger volume base, right, by a negligible amount, right? It's like a whisker over for increasing, right? 4 contracts, 1% more volume, essentially less than 1% more volume than the previous day is not exactly a significant indicator of increasing momentum. So again, right, let's see how basically price reacts at this initial resistance. And if we can make that feel insignificant, then today should be relatively tradable. Crude, right, we've got 2 out of 3 here to the downside, so trending lower going into crude oil inventories here today. That could be a little bit of a trend reversing news narrative. But I'm not going to be super focused on trading this here. Just going to be keeping an eye out on it and making sure that it's, not like causing any extra hiccups for us here this morning. And then stuff like Apple, Tesla, Microsoft, right? Kind of the variety of leading names that we look at here across the board are giving us an indication of kind of weak trending price action here to the upside, or a sign of maybe some building momentum here higher. So looking forward to seeing basically how these combos of information all sync up, right? Can I get a clean narrative? Can I fall in love with price action here today? Yeah, so the reason why we're flexible to have some bias or to go to the downside as well in NQ is because that volume is increasing, but it's not increasing by any significant amount, right? So it's 4,000 contracts traded. That's like one order for some people. So it's not exactly a huge indication of that building momentum. And it's in an area where we've seen bears step in and defend before, right? So a little bit of extra volume doesn't really invalidate that Tuesday candle, doesn't really invalidate any of these Wednesday, Thursday candles from last week, right? As that volume standard is still significantly less than anything we saw then. So if we do get a scenario here to the downside, I will be interested in playing it, but we want to make sure that we're just getting more volume than what we saw yesterday if we're going to be saying that, hey, bears are now in control. ES, we've got, a decreasing volume profile, so we have that flexibility baked in, but just contextually with NQ, we want to have ourselves basically that flexibility to, see if we can basically put together a clean opportunity, right, if that's what the market gives us. So, the 3-for-3 conditions are a starting point here, right, for us to develop a daily bias, but we don't want to ignore the information that we see directly to our left, and NQ here is a good example of that today. Does that make sense? All right, cool. So markets are open. Let's see how the day goes here, guys. I'm excited. I'm motivated. I'm ready to make some money here today. And let's see if it goes. Early selling pressure. And already, right, a bigger range than what we saw yesterday on ES. It's a good sign. Not quite there on NQ, but we might get there. I mean, we're 40 points in, 30 seconds into the day. It's going to be hard to be hyper aggressive, right, until we get a clean narrative. Seems like everything seems to be selling off here early. Good volume on a Tesla. So let's see how it goes. we see bears lose and get wiped out like we're seeing here early, that would be a good sign for the bull case, right? Bears attempt to reclaim control, failed to do so, and then we can bounce back up above those psych levels. That would be a pretty optimistic start if you're a bull. Let's see. Still a long time to go here on this opening candle. Everyone can still see the plan just fine here, right? Just made the font a little bit smaller. Still visible to everyone. Cool. I just dislike when things get super messy on my screen. So it just makes my life a little bit easier. Slight divergence between ES and NQ, but not a significant one here yet. And I don't think we're going to get there on the volume standard. To the downside. Be close, but I'll be surprised if we get there on the 3. We have it on ES right here to the downside. Much better volume. And yesterday, we saw banking stocks get absolutely tanked. Whoops. All right, so we saw banking stocks get freaking crushed yesterday. I think that's probably why we're seeing maybe some of that extra weakness here in ES versus in NQ. And what's been the theme we've seen here so far this week regarding price levels? That's like kind of just happening here right now, potentially. What have we seen happen multiple times here? Yeah, psych level rejections, right? So this is getting stuffed at 18,906. We probably want to see it hold above, right, that initial area. Big range on the 5-min, 17.25 points on ES. That's massive, right? 18 points here now. It's the biggest we've seen in a while. $22 points now. Wow. Okay, NQ breaking down. VIX is above 19, right? So it's climbing aggressively here. That probably gives us a little bit more confidence of a bearish scenario. So why aren't we looking to go short ES yet? Yeah, needs more volume, right? Our setup trigger here for a breakout through this opening range is a high vol breakout. That's high vol, but it's not increasing in high. So we're willing to play a low vol fake out. We're not willing to play a low vol breakout. Does that make sense, right? Because a low vol fake out actually is a sign of weakness, right? So if you're going to be going reversal, you know, reversing after weakness makes sense. Chasing a move, right, and expecting further follow through here to the downside on weakness or on decreasing momentum is a good way to get stopped out. And we've got a massive range here this morning. So if we do have, right, an increasing volume standard here, we've got plenty of room to go down towards that 546 area. ES might give us that look here. So I'll be watching this. Thing we also saw, right, on ES, last time we saw a range that was this size. We just looked at it very briefly, if I can find it again. Is we saw an initial good candle, fake out lower, and then the big move higher, right? So good strong candle, fake out lower, then the move higher. Same thing, right, on this previous example. So that might be how we're setting up here so far. I'm not sure if I'm really ready to call that a reversal candle. Apple holding up pretty well. Microsoft holding up pretty well. Maybe our semiconductor names taking a little bit of a beating. Not Nvidia, interesting. So a little bit of a divergence there. So yeah, still being pretty patient here so far this morning. Do I wish I YOLO'd full port, right, at a rejection at 906? Yeah, that would have been fun. But not an edge that I can repeat, right? Interesting. If this candle can go green, this could be our fake out candle. I mean, that screams fake out, right? Let's give this 5-minute chance. Again, seeing bulls or bears fail might be our best way for us to get a trend day here today, right? Just because it's been choppy, right? So if we could see one side lose the tug of war, essentially, get a bit exhausted, that could create that, we'll call it separation, right, that we've been craving here so far this week. Pretty unrelenting selling so far, though. 35. We went from 60 to 30 in a minute. So again, still no reason to be hyper aggressive yet. Little inside bar here. And we would have just been stressed out had we chased, right, an entry here yet. Maybe you could have gotten that, but that's scary. We are seeing decent absorption here so far. Right? See how it's like drifting down and then gets stuck? See how it just like it hits 84.50 and then stays there for like a second? We just don't know if that's absorption to the upside, right? Or to the downside. So ES maybe about to make new lows. Got close. See how it bounces, stays there for a second, and then bounces again? That means we're seeing that tug of war, right, very aggressively here so far this morning. VIX continues to climb, pushing up towards that 20 handle. And then we're starting to see maybe a little bit more cooperation across the board of seeing selling pressure. Here's 805, 800. 801, 802. So again, so far a good decision to have not traced these moves. I'm honestly impressed. Very impressed so far by Bears. Again, a little bit of a fake out under 18.8, right? So we've seen a fake out above 18.9, a fake out under 18.8. So chopping in between like, say, 120 point range, give or take. So no real indication of trending price action here today. Makes sense. So that's like dip buyers protecting those CPI lows. Let's see if we see that show up with volume. That could just be algo orders. Coming off these, wow, look at Microsoft. Jeez. It's about as much waffling as we saw at the debate last night. That's crazy. Now, I don't have a skin in the fight because I'm Canadian, right? So I'm not particularly invested in U.S. politics, but I just want good memes. Give me the memes. And poor Ricky the dog, he was getting nervous when they were talking about all the migrants eating cats. He's like, oh boy, I'm not next, am I? Oh yeah, I mean ours is, it's horrific, Greg. So ES on this 5-min could be where things start to get interesting for me. Right, 469.25 would have to be the entry, or I'd rather have the aggressive, gets my stop tighter. got lots of space on the 5. The 3-min is at its 2R level already. Right now, the trade on NQ seems to be buying every move under 18.8 and selling every move over 19.9 or 18.9, sorry. So I'll start to set this up. Stop loss has to be 469.50. So if I have an entry price under 63.25, that would be a 2-contract play. It's 9:52. No data at 10 today. All right, yeah, no data at 10. So again, we're looking for elevator down and then retest right into that 54 or 62.25. So we don't have that much space here. Okay, there's elevator. So now let's see if we can get a little retracement back. Ooh, that's a bit of elevator up. Give it a second here. We want to see another elevator down and retracement. I don't like how quickly that was gobbled up. Yes, or NQ, sorry, made lower lows on that flush as well. So let's keep an eye out here closely, carefully. So it needs to get stuffed and flush. NQ back up above 18.8. See how long it lasts. $467. So still nothing here, guys. Still nothing. $465. So again, we're still wanting to see a flush elevator down right under that 63.25. So let's see. So all I'm doing here is watching the price, right? I'm pointing with my pen, but just watching how price is moving. So far, no real reason to jump in yet. This could move fast, so have everything set up, be ready to go. I just got my finger on the trigger here. Okay, so watch elevator down. We got stuck at that 63 flush, bastard. Okay, so now watching for elevator up. Or sorry, stairs up. Sorry, apologies. Didn't quite pull back up above that 51 or 61.50 yet. This would be a 1 contract play at this point. 2 contracts would be risking about $800. That's too much. Still no, still no, still no. The one thing that's giving me just a little bit of pause here is why couldn't this candle close under that 63.25? That's bothering me just a little bit. Because if bears are strong, they would have, right? I mean, NQ flushing again. Sub 18.8. Okay, so watching pull back here. Can I go stop loss like this? I don't think so. Okay, so now we do elevator here. 61.25 stop loss. Oh, it's 10 points already. Fuck. That ripped. So it's got to get to 55.25. It's a tough one. At which point I could do 2 units here. I don't like that bounce. The other thing here, I'm getting, we'll call it like my Vietnam flashbacks to yesterday's selling pressure that we saw here early in the morning. So I'm maybe a little bit pessimistic about this here. Where I don't feel like I'm seeing as strong of a reaction as I'd like from bulls or from bears. Like now this on, like this looks like a reversal, right? Gonna be second biggest volume of the day on this. I might be talking myself out of a bear case scenario here. If NQ can get back up above 18.8 on that reversal, that might be the trade I'm more interested in. I have, yeah, I'm getting a little bit of some flashbacks to yesterday. Where price was moving without giving me the type of, we'll call it flow that I wanted to see, right? Oh, it's not going to be this on the 3. Bottom wick is bigger than the body, so not a confirmation there of continuation. This NQ's really catching my eye. Yeah, I think so too, Rusty. Now, if ES can fill out, get under like, or to around that 50 handle, that gets interesting. NQ, I want to see it get above 18.8 though. Because if it keeps getting stuffed there and it keeps making a relative lower low, lower high, that's not going to feel particularly strong. So if dip buyers actually are enthusiastic here, that would be more the narrative I'd rather fall in love with. But in theory, have possible flexibility in either direction here. Do it. Hold, hold, hold. And obviously a pullback, you don't want to see it pull back too much. So aggressive entry would be ideal. Breakout, hold, come on. Oh, this is going to be close. Ooh. Fuck. That closed right at 800. Okay, so it's back up above 8. Ooh, big stuff. Big flush. .40 stops. Pretty aggressive. Microsoft's, jeez. It's more toxic than Bill Gates' mosquito plan. Not super thrilled about the divergence signals between ES and NQ as well, right? ES maybe looks more like a downside setup. NQ maybe looks more like a bounce setup, right? The reversal. Fix creeping up towards that 20 handle. It is not relented here yet. As is, you're risking about $800, $700, $675, $685 on NQ per contract. So it'd be a one contract play. That's 500. Still don't have a great feel for this. ES 10 min here could be the play. So stop loss 53.50. Yeah, so I'm watching this to the downside here on this. We have a 10 min signal. Okay, so let's see if we can get a little stairs up here action. And this could be two contracts. Don't like that. Give me elevator flush. Come on. Okay, new lows. Now we want to see a little pullback. All right, guys. So I am short 54.4750. Two contracts. Nice, Greg. Love it. So let's see if this thing can break down here. Give me some follow through. If not, I'll take the little baby loss and move on. Reward me. Come on. So back at entry, want to see it flush through here, make some lows. So far, so okay. Want to see a bit more oomph here. There we go, starting to move down. So that's plus 425, plus 525. We're getting there, guys. We are getting there. Good start here so far. Exactly the reaction one would like to see. Plus 800. All right. Great job, everybody. Great job. So there we go. Now recovered all of yesterday's loss. Now this move is happening a little bit more aggressively than maybe I expected. It's a pretty fast breakdown. Let's see if it's got the juice here. There we go. Keeps going. Plus 15. See if it can crash through 54.30. Everyone feeling good? Yeah, we're almost at 2K here with one or two contracts. That's epic. So good bounce back from yesterday, guys. Well done. Remember, guys, we all lose. We just can't allow our losers to influence our behavior, right? So we can't allow ourselves to be fooled into thinking that, hey, I need to revenge trade this or I need to do whatever. Sometimes you got to just walk back, right, and be refreshed so you can take another shot at the plate the next day. Yeah, I'm would love to focus on NQ here, Herschel, but right now I'm in this ES, so I'm not going to multitask. Nice work, man. Hell of a trade. Sorry, I only saw part of your message there. I would like to see this thing hold under 30. If it holds under 30, then I can look to build up some positions. Nice work, Derek. Well done, man. Here we go. Not bad for two contracts, guys. Not bad for two contracts. Nice work, Suresh. Well done. Love seeing you guys taking your P&L as your P&L is increasing. That's a fantastic habit. Love it. Nice work, Greg. Oh, I'm not jealous, Judson. I'm not jealous. What a trade, man. Congratulations. Yeah, I agree, Greg. That's the right idea, man. No need to force it. Well done. So, minute and 50 seconds to go here. Needs to hold under 54.30. It is increasing volume, so if we can hold under that area of support, right, then we can look to build up a position, right, and add a third contract here. If it doesn't, I'll take my $1,600 and, you know, give the dog a belly rub or something. Okay, so 40 seconds to go. Nice work, Antonin. That's awesome, man. Love that you held on, right? Trusted your plan. Really proud of you, dude. That's fantastic. Write down in your journal how good it felt to trust yourself. Have that as like your lighthouse for the next trade. But you should be thrilled, dude. That's awesome. All right, so now we want to see elevator down, right? Stop loss will go 430. So elevator down, some stairs up. Let's see how this behaves here. Okay, so I have another contract bought at 426.50. Average price is now for 44.50. So average price is 44.50, right around here. Stop loss is 430. And let's see if this thing can keep cracking for us. Come on. Keep breaking down, you son of a bitch. There we go. See if we can keep flushing. I want to see it get under 20. Ooh. Don't like that. Come on, break, break, break. Hey, good morning, Rod. Don't like how quickly that bounced. All right, guys, I am out. I got stopped out protecting. Let's go, Jared. Let's go. Nice work, guys. Well done. 17, almost 1,800 bucks, 1,600 bucks. Cannot complain about that. All right. Woo. We needed that today, right? We needed that. Nice work, Judson. Congratulations. You're starting to wrap your head around that pyramid? Nice work, Joey. Nice work, Jason. That's the biggest P&L I've seen here. Let's go. Well done, Mike. That's fantastic. Yes, back under 430, of course. Classic. Hell of a trade, though, guys. Hell of a trade. Nice work, Jeremy. So, guys, like pretty much everyone I've seen here, right, did the right thing here today. Made back their loss from yesterday, trusted their plan, and played the numbers game. I honestly cannot stress how big of a smile that gives me, right? Because we reinforce good trading habits when we put ourselves consistently in situations where we're one trade away from being green. I freaking love that, guys. As like someone here who rants and raves for a living, I gotta say that is fantastic work. Give yourselves all a pat on the back, because that is unfortunately what profitable trading looks like, right? It doesn't always feel fun. It doesn't always feel good. But doing the right thing when it's like new, and boy, oh boy, does it have to go. Wow, Judson, that's incredible. And you have what, 20 accounts? Nice work, Juan. Hey, 1650 is a great day, man. Getting yourself closer to that target. I love it. I have to say, team, as like a general rule of thumb here, I think everyone's P&L has significantly improved since we changed to this style of risk management, right? Oh, I feel so good. Right? And the reason why is because we just get a much better true return on risk, right? So like our Sharp ratios, that would be the algo term for it, has improved dramatically. Hell yeah, Judson, it pays, man. It does pay. So I love it, team. I love to see it. The easier we make it on ourselves to lose well, easier it is to win big, right? And we keep getting that reinforcement. Nice work, Dwayne. It's a hell of a day, man. So now we got 2 minutes to go until crude oil, right? This could give us a little bit of some chaos here in a $1.20. Now am I thinking I'm going to place another trade? I'm not sure yet, but I need to see something set up and probably a reversal versus a continuation. But we nailed our plan here today. We nailed it, guys. Nice work, Bruno. Put this way, $1,500 a week probably gets people in situations where they can say goodbye to their boss, right? An extra $6K a month, that's more than the average person makes in a year. Yeah, if we can get multiple of those a week, and then sprinkle in the every now and then psychopath monster, it's gonna get fun. Oh, they're my favorite, Jared. I agree. They are my favorite. A little bit unlucky we got shaken out. This one was going to push that territory. So see that algo sell we're getting in cooperation here on the indexes, right? At crude oil inventories, crude is dying. But we're also seeing NQ and CL tanked on that same news. So I would say probably the right thing to have closed that trade prior to that news event. Even though it would have paid us out here today. You know, it moved 20 points, right, in 30 seconds. If you got stopped out on a trade like that, you're dealing with a significant amount of slippage. And that wouldn't have been fun. Jesus Christ, crude. Man, I love this job so much, guys. Sounds good, Emil. Enjoy your day, man. Low of day is just above 1800, 18.6, sorry. It's interesting. Don't think we're going to get enough of a look here for a reversal. Ah, Rod, you have nothing to complain about, man. You made more yesterday than you know what to do with, so no issues, dude. I wasn't able to access it was a Facebook link, right? I wasn't able to access it this morning. I'll try to take a look. So VIX at 21. It's a big move. Again, another attempt here to maybe break down through these psychological levels. Still enough volatility here left that, you know, maybe I could be talked into something. But I'm trying to be very cautious. How's everyone feeling here? Good? Love that, birds. Love that. Love that, Herschel. Good job, man. Yeah, today, I mean, for myself as well, I feel very vindicated today. Not vindicated because I got the direction right or I made money. It's that vindicated that I didn't allow sort of like the blue mood I had after yesterday's trading day to impact today, right? And I didn't compound mistakes. I feel very good about that, right? That's like really good confirmation bias of like one day doesn't define you, even though sometimes it feels like it does. Yeah, I mean, you don't want to be trading your P&L too much, right? Take it as it gives it to you. Because we're over the long run, right? We can make back our losses, no problem. But sometimes like trading for that P&L target, what ends up happening is it's like, okay, I need to make 300 bucks here today. And then you lose 300 bucks, and now all of a sudden you got to make 600. And then you lose 600, now you got to make 1200. And you just get caught in this like trap of chasing. And so I would be a little bit aware, basically, of that, right? Because it's, to a certain extent, it's like a version of greed. And once we start trading with like that greedy muscle memory, it becomes very hard to shake that habit. Because it kind of gets you to that like out of body experience. And once you have that out of body experience as a trader, you go from being rational and logical to being kind of random in your behaviors. So like, you know, you want to think about it like Moneyball, right? There's like that scene. Oh, we can't replace Jason Giambi with one player. We can replace him in the aggregate. And that's kind of how you have to think about our P&L, right? We can't always thinking about replacing it with one hit. We can try to replace it in the aggregate. What was your entry price, Ben? Okay, so you bought when I bought my third contract. Yeah, so I would avoid doing that. Ends up being very expensive. Long term ends up being very, very expensive. Because we're adding there because we can be risk-free, not necessarily because we have a perfect thesis continuation, right? So like when we're buying extra contracts or we're buying more sizing, we're not trying to get perfect entry timing. We're trying to maximize our P&L potential by finding that risk-free point. And so how you behave in that way is a lot different, right? Versus when you're trying to get that initial entry. It requires significantly less precision. And so that's why, yeah. What time frame? Like this one is 10:15 on the 5 or on the 10? Yeah, I get that, yeah. And that was approximately when we added in. But at that point, right, move's already very extended. We've been in for 15 points or whatever it is. Yeah, I would just think about that logic a little bit. I'm very impressed with the selling pressure we've seen here all day. Very impressed. I don't think I have the courage in me to try to dip by this. We've seen too much unrelenting selling to be like, yeah, that's the move. So I'm pretty happy with the day. I don't see any reason to do anything more aggressive here. And I'd be skeptical to try to chase this down lower because it's already given us so much move. So much of a move. Sounds good, Nate. Who in here is sticking around for the call, for the coaching, the one-on-one, or the group call? Let's get a head count if possible. All right, fantastic. Good. Sounds good, Jeff. Well, have safe travels, man. Good man, Rod. Good man. All right, so if you guys want to start to put together like some questions, things you want to go over, then yeah, let's put together that list and we'll start this thing up in about 5 minutes or so. So really the format here, guys, is going to be, you have to be the ones asking questions. Like I already rant and rave enough throughout the day. So I need you guys to be driving the questions here, and then I can kind of fire through an answer. There's going to be no such thing as a dumb question here. So anything that you want to talk about, anything you want me to explain, I'd be happy to do so in as much detail as I can. or point you in the right direction to be able to get the resources that you need. So yeah, put together 5 minutes of question gathering, and then we can get started. And just in that short term, I'm going to go make myself a cup of coffee and yeah, get prepped for this. So just bear with me here. Be back at in about 5 minutes, and we'll start the one-on-one then, or the group call then. All right, guys. So let's get after it here. Who's got the first question? Anyone who wants to start things off? Yeah, so it's basically, if imagine we were to trade this graphic, right? And we're looking for high vol breakouts under the opening range. We're basically looking to add each time we get one of these signals. So today, right, on our downside addition here, right, on this 10-10 candle, we had increasing outlier volume, right, and a full body bearish candle. So once we get that signal, right, holds under our point of resistance, that ends up being, right, our trigger to add into that trade. So it's basically every time we get a signal that also mimics this strategy, right? So when we get that high vol breakout or high vol separation away from the range, or a high vol separation away from our original entry price, that ends up being our trigger, right, to build up a bigger position. And then it's the same process, right? Stop loss at the high of your entry candle to protect. And then if the math basically indicates that, hey, my average price will say 461, and I buy in another contract here at 427, will that get me at or above what I'm looking for, or what's the narrative? So then from there, it just becomes a math problem. So the signal to add is on each high volume separation away from our entry. Well, it's just exactly what I talked about there, Antonin, right? When I look to build up my position or add in or protect my position, once I get to that 2R, and then once we establish a new area of logical support / resistance. If I doubled my risk, Rod, basically the pain point that I have to deal with there becomes more psychological. So everyone has a number that breaks them and removes their ability to basically think and behave like a rational human being. So I keep my risk where it is because it allows me to take 10 shots a day here without really losing that ability to be rational. So risk is a multifaceted approach. Obviously, numbers should be objective and binary, but everyone has a number that breaks them. And so I'm doing everything I possibly can with my risk management to make sure that I stay under what my number is that breaks me. Inside my TradeAvate accounts, I have it set up so if I take a 3K loss on the day, I'm cut out. And so I'm sizing everything to basically make sure that I avoid that possibility. Good question. And truth be told, I'm pretty happy with my P&L. So, like, I don't feel like I need to be taking on more risk here at the moment or taking on more sizing and then go from there. Yeah, so I've talked about this a few times, SSB. With my funding, I want to make sure that when I withdraw profits, I'm always above my max trailing drawdown threshold. In general, inside my funded accounts, I look to take a payout every time I'm up 20K in them, and then I withdraw half of that per account. So I leave myself about a 10K cushion. And yeah, then give myself like 3 to 4 max loss days before I lose access. So technique-wise, it would be basically trying to avoid, especially with Apex, trying to avoid trailing drawdown limits by keeping my sizing pretty conservative and not pyramiding in until I'm above that trailing drawdown threshold. And then once I'm above that, then I can start to be more aggressive by adding on more winners. I would say at this point, I like Top Step the most. I've had just, and the reason I like them the most is because the payouts have been the fastest. Yeah, great question, Sarah. So I think that there's a couple benefits to that, especially if it's your first payout. One, there's a win, a psychological win of getting your first payout without losing an account. Especially with Apex, until you're above your trailing drawdown threshold, they punish you for your high watermark, essentially, right? So if you have a, I don't know, say a 5K day, but you give back $2,500 of that P&L, then you're going to lose $2,500 of your drawdown. So trying to set yourself up so that your account isn't slippery is, for me, a really big benefit or a really big perk psychologically, because it gives you a buffer. And then once you have that buffer, losing an account becomes very, very challenging. So it's kind of twofold, right? I'm trying to not only optimize my payouts, but I'm trying to make sure that I can actually get a payout by not being too aggressive early. So like working my way into that sizing is sort of the point, or the objective. And then once I have that buffer, once I have a payout in my bank account, it's much easier for me to be aggressive because I no longer can lose it as easily. So you don't necessarily need to get a payout, but I would say with Apex specifically, I like the idea of using micros, Mike. That's fantastic. But it's just about getting above, especially on that 50K account, getting above that $2,500 threshold so that you're like playing with profits, right? To a certain extent. So if we're thinking about our pyramid strategy where we want to increase our P&L potential without increasing our risk, with Apex in that initial starting point, if you increase your sizing too much, you're also increasing your risk of losing your account. So we want to make sure that that's impossible before we start to become P&L hunters. And yeah, the workaround there would be exactly like Mike is talking about, especially with those 50K accounts, of trading micros, because your risk is going to be a fifth, right, per contract. So you can build up better sizing, practice with micros, do all those techniques, and then from there, right, start to build up your risk. Well, it's a form of getting leverage, right? Yeah, Sarah, the big days will happen for you. I wouldn't rush it. It's just a thing of process, right? And once everything clicks, the numbers will take care of themselves. So I wouldn't worry about that too much. With the copy trade, the point is that I can basically just build up more leverage, right? So my max risk on these funded accounts is, say $200, right? That's what I'm going to lose if I'm wrong. So once I have a nice buffer, I've got making some money, I can scale up my P&L potential without having to make more decisions, right? So I can get paid out 5x what I get paid out on one trade by getting more accounts, essentially. And then ideally, right, I mean, it's a little bit different now because we're starting with 1 or 2 contracts, so our risk is really capped to begin with. But it allows you then, right, to spread out your risk to, again, make losing those accounts much more challenging than if you were going like full port with 1 contract. look, in general, when we're trying to optimize our trading, it's easier to scale our proof of concept than it is to add new strategies or new techniques or new ideas. So if I can scale up my proof of concept by simply just passing another evaluation, that's much simpler from me from a technical perspective than it is from adding like a new setup trigger or a new something along those lines and introducing new variables right into my process. And the one thing I want to stress, guys, right? Big days come from a consistent, repeatable process, not by over leveraging yourself, right? In a single account or in a single trade. Those trades where you're like all in on something and, you know, you're like flying by the seat of your pants. Those tend to be the days where you either blow up, right? Or give back all the P&L that you've worked so hard to create. So the ability to compound positive decisions leads to a lot faster account growth over anything else. Does that make sense? So basically, like, what I'm trying to always make sure I'm avoiding is like that out of body staring at your P&L hoping, right, that you're going to be green. Right? And the more I can protect myself from that feeling, generally the more money I make, right? Because I constantly remain in control over my trading. So when I'm in control over my trading, I make rational decisions. When I make rational decisions, I can repeat those processes. When I can repeat those processes, I can make money long term. It's those days where you chase a feeling that get the most expensive. Yeah, that's a great question, Joey. I love the idea of using these prop firms to make your first 100K and then to use that basically as a secondary account to trade. For myself personally, I've got multiple funded accounts, and then I have a family fund that I manage for my dad and my sisters, and that started with about 100K in it. And then over the last couple of years, been able to scale that really nicely. But yeah, I'm a big believer that 100K is a good starting point. When I first started trading solo, so when I quit out from my fund, or the fund, I shouldn't say my fund. When I quit out from the fund, I had 50K to trade with. And then I had a backup 50K in case something went wrong. No, I'm unable to copy across my Interactive Brokers account and my prop firm account, so I'm setting up multiple orders. It's a little bit chaotic and hectic, but I am able to get it done. Oh, interesting, Mike. That might be something to look into then. And the way that I trade the family fund is a little bit different to how I trade here. It's the same strategy, it's the same, those kind of things. but I have like a core long-term position, right? So I've got, long-term exposure in SPY. I've got long-term exposure in a select number of stocks. And so a lot of what I'm doing there on a day-to-day basis is like collecting premium. So doing covered calls, stuff like that. And then the occasional like day trade like I'm doing here. Maybe at some point, Juan. Maybe at some point. The reason why I don't do that at the moment is twofold. So one, I really enjoy the freedom I have of just how things are set up right now. I like the current structure of my business. I enjoy it in this context. I find that me streaming and talking through my ideas and thoughts and working with all of you on a day-to-day basis fundamentally makes me a significantly better trader, where I feel like I'm still improving and growing and honestly learning a ton. And what I think would be something that I wouldn't enjoy very much would be answering questions from investors over like why I make decisions or something along those lines. I think from like a mental capital perspective, that wouldn't suit my personality very well. So I would need to have a lot of infrastructure in place to be able to accomplish something along those lines. And so maybe that would be like a 10-year goal, but not a like immediate objective. Truth be told, like before I would want to run public markets or public accounts, I kind of want to have not only a track record behind me, but also like a certain element of like FU money, where yeah, like I wouldn't be where it wouldn't be as volatile. Yeah, so Joey, the way that I pyramid right now and add to winners and things along those lines is very similar to how I traded institutionally and at the family office that I worked at. The main difference is that when we enter positions, we're starting at 0 and ending at 0. Whereas when I was working institutionally, I was trading $40 million positions. And so you don't ever open 40 million and close 40 million in 20 minutes. You'd be like adding 5, closing 3, adding 7, closing 5, right? It would be stuff more along those lines. So you have a constantly rolling portfolio and you're trimming and adding to it versus going 0 to hero. The main differentiator, I would say, is that just the liquidity that we need to make money is significantly less than what a fund needs. And so I can get basically start every day at 0-0, whereas at the fund you'd wake up and you'd still have a $27 million exposure you have to manage that day. And it would be with this quote unquote pyramid technique. It would be the same types of concepts. So it's more like trimming to a core position, taking profits off a core position, but never going to 0. So very, very similar. But yeah, you just have always money behind you. No, I would still be trading on the 3, 5, 10. But the signal, say I would get, right, would be, okay, we want to trim, like the instruction I would get from my portfolio manager would be like, okay, we want to trim a third of our position at 18.7, for example, right? So then once 18.7 happens, I would close a third of my position at 18.7 and then look to buy back in, right, at 18.670, right? And then close more at 18.7. So it's still the same way. I would still be trading the same 10 min, 5 min, whatever, right, to get my signals to go and build up my position or trim my position. But the signals that we ran, the algo signals that were generated, were 3-day or 20-day signals. So you would have like a 20-day view of the market, and then short term you would look to basically add to pops that confirm that 20-day narrative, right? Or trim once you get to profit targets. And then the way that I was judged from a how well I'm trading perspective was based on how well I outperformed essentially or underperformed the signals that we got. So for example, if to go back to that 18.7 example, if I was told, okay, trim a third of your position at 18.7, and I closed everything exactly at 18.7, followed the instruction to the T, then I would get no money added to my bonus pool. If I closed, say, a third of my position at 18.720, the difference between that 18.7 and 18.720 would go to my bonus pool that I would be allocated at the end of the year. All these companies are going to have their own FAQ sections that highlight those rules very clearly. And I would recommend that you all read through those before you choose to sign up for an account. For Top Step and My Funded Futures, they have the simplest rules. They don't really care what you do. There's no restrictions on news trading, dollar cost averaging, none of those things. So it just becomes a drawdown thing. For Apex, they have rules against dollar cost averaging and trading in news. My personal favorite is Top Step at the moment, simply because their payouts are the fastest. But I also have a different criteria potentially than you guys, right? I don't feel like I need to run 20 accounts. So Apex is less appealing to me in that context. Top Step. So I have... like I'm happy to be capped at the max 5 accounts, right, that they have. I don't feel like I need more exposure than that. Truth be told, like I have 3 income sources right now, right? I've got my business, I have my prop firm accounts, and then I have my personal trading accounts. The profit I make in my personal trading accounts, I keep entirely in there. The profit I make from my business, I reinvest into my business and use that to try to keep growing DTR. And then the profits I make from my prop firm, I put aside for like big ticket items. At the moment, a lot of my income is going towards my visa application and the process of trying to move to the States. And so I'm pretty happy to put as much money as there as I can. So everyone is going to have like slightly different goals, right? If your objective is to run 20 accounts and to try to grow that up and build up like your own personal portfolio as quickly as possible, then yeah, maybe Apex is a good choice for you. If your goal is to make 20K a month, there's probably simpler prop firms that have easier rules to help you accomplish that. So with the classification, Brian, that I'm going for, it's a E2 visa classification. And what that means is that it's essentially a startup visa. And I need to put down, quote unquote, a significant investment into the company to basically qualify for that. I have to put a significant capital amount at risk. As a starting point, that's about 100K. And so I'm trying to basically spend that 100,000 within, the next 2 or 3 months. I've not seen any prop firms deny for us taking trades in concert. I haven't seen any issues there. It would be very hard to prove, to be honest with you, Igor, because they've got so many users. So I think it would be challenging. I am Canadian. I grew up in Vancouver, and I spent from 18 to 26 in the UK. So I think that destroyed my accent, destroyed my Canadian accent. What were my vital habits? So, it's a good one. I think for myself, the hardest thing for me to have gotten over, the biggest hurdle, was basically a belief that I deserve the success that I want. I think that for me was the most challenging thing to kind of build up towards, or like to start to actually believe that, hey, I do deserve financial success and that I'm good enough to get there. So I think it was a lot of just crushing limiting beliefs. I didn't necessarily grow up in a house with a lot of money. Like the 08 recession hit my parents very hard. And then my family, my mom had a lot of medical issues before she passed away. And my dad, bless him, I would have done the same. He spent every dollar he could to try to keep her alive, right? And so for me, it was always like I was always told growing up, oh, we can't afford to do this, we can't afford to do that for X, Y reason. And so for a long time, it was, thinking that, oh, actually, I don't deserve these things because I've never deserved them. And so overcoming that belief was probably the biggest limiting factor I had to becoming consistently profitable. From there, I would say that like it's a repetition thing, right? Like I think you can get addicted to losing, and I think you can get addicted to winning. And so getting addicted to the habits that have made me profitable then kind of start to compound and build things up. And so I don't know if it was a singular one thing. I don't necessarily subscribe to that. I think it was just a combination of 1,000 little things of just feeling like, oh, I need to do this, and getting comfortable with that like discomfort. And the more that I could start to embrace that discomfort and find like confidence in it, I think that consistently made me more profitable. So like during I would say during like some of my darker times from like a mental health perspective, especially when my trading wasn't going very well when I first came back to Canada and started trading my own money, I had like a period where I went gangbusters for like 3 months. And then I had like a 2-week period where I basically gave back everything, where I lost it all. And I remember I took some time off after that, and I went on holiday to Mexico to a resort by myself, which was a little bit depressing. But I sat there and I just thought, okay, if I want to be a millionaire, what are the habits that I would like if I was a millionaire to have, right? And I basically just sorted those habits from least expensive to most expensive and started doing the least expensive ones first. So for me, the first thing that came up was getting in shape. At the time, I was like relatively overweight for what I wanted to be. I was carrying a lot of, call it beer weight from my time in England. And I was like a pack a day smoker. So I cut that out. I got into running. I started doing like body weight exercise stuff, a lot of burpees, things along those lines. And got pseudo serious about my diet. So that was the first thing that was on my list. And then from there, it was really about just continuing to compound a lot of those decisions. So as I started getting more serious about my fitness, well, then I started getting more serious about like going to bed on time and, making sure that I had good sleep hygiene. Once I had good sleep hygiene and I was confident that that was making me have the energy I wanted on a day-to-day basis, it was about protecting my mental capital more, which is something I still struggle with, and not allowing myself to basically live and die with the result. So it was constantly just doing one thing, seeing what then I felt like I needed to do next, and then just obsessing with, yeah, basically going after those habits. And that for me is going to be a lifelong journey. What I find with trading is that it constantly highlights to me the things that I need to work on. And then generally the thing that I'm trying to avoid the most is the thing that I probably need to fix first. And so that's kind of how I look at it. It's, I don't know if it's ever a singular thing. I think it's a combination of a bunch of little things that make a difference. I'm not sure who Dan Aykroyd is. I was trying to trade too much like I was institutionally, to be honest with you, SSB. So, like, what I mean by that, right? Or maybe not trading too much like that. I was institutionally, but I was relying on too many of those bad habits. And what I mean by that is when I worked on the desk, there were 5 members of staff whose job was to make sure that I didn't blow up. So we had back office, we had risk managers, we had psychologists, we had all sorts of individuals. I had a trading assistant whose job was to basically make sure that I was constantly at my peak performance. And when I went solo, I kind of, I don't know, like disregarded the importance of those roles. So, yeah, like I didn't take my mental health very seriously. I didn't take my risk management very seriously. I kind of allowed, or like when I worked institutionally, like I kind of allowed other people to take accountability for those decisions instead of taking accountability for them myself. And so when I was in my losing streak and I gave back that 50 grand, it was basically just like never giving myself the tap on the shoulder to walk away. And so for me, that was the one thing that I had to really, yeah, be accountable for. I didn't have to be fully accountable for my success when I worked there. There were a lot of people who were getting paid, 6 figures a year to make sure that I wasn't being an idiot. And I wasn't really replacing those roles in my own personal trading. The other exit option, right, Bergs, is pick a plan, right? So pick one of these levels and close at those levels, right? So if your goal is to close at 18.7, awesome, close at 18.7, your entire position. If it's close at 18.6, close it at 18.6. That would be the way that I would look at it. Love that, Herschel. Love that, man. Yeah, I don't know who Dan Aykroyd is. Oh, I've seen Blues Brothers. Let me Google them. Oh, okay. Yeah, I know who this guy is. That's fine, Craig. That's fine. I have to admit, I do live in a little bit of a bubble. I watch the same 10 movies probably all the time or on loop. I watch the same TV shows in repeat. So my knowledge of pop culture is very much in sort of place. Don't hold it against me. Yeah, 100% SSB. It's um, like I talk about having a number that you know breaks you and building everything out from a risk management perspective so that hitting that number is impossible. And so that for me is what that really means. It's understanding that okay, I am going to make mistakes, but when I make a certain amount of mistakes or I lose a certain amount of money, it's much more challenging for me to bounce back from them. And so everything I do from a risk management perspective is about obsessing over making sure that I can't hit those numbers. And that's a big reason why I switched to this pyramid technique, is because it allows me to stay so far away from what that risk management is that it's a lot easier to not live and die with my P&L on a day-to-day basis, while also keeping very similar, if not greater, P&L upside. And the P&L upside is greater, not necessarily because my win rate is better. Now, on my max wins, I make a lot more, but it's just a situation where I'm not recovering from such big of a loss, right? So even yesterday, okay, I lost $1,100. I only needed one trade, right, to make that back here today. Whereas had I been trading the previous technique or the previous risk management technique, I would have been down $3,000, and I would still have been down $1,100, right, or flat on the week if we count Monday's trade. And so just having that structure in place makes it a lot easier for me to not have to trade my P&L, where I can trade my system accordingly. And yeah, it's just created a lot more upside. I've heard some good things about Yellowstone. Yeah, maybe one day I'll check it out. Truth be told, most of the stuff I watch is just sports these days anyway. It's NFL season and the Premier League is in full swing. So that takes up enough of my time and mental energy. 'Anything else on your guys' mind here? 100%. And like the income I make now is probably what I'd be making if I was still working institutionally, like with bonuses and stuff like that, and assuming the fund performed really, really well. But I work a third of the amount of time that I would have worked there. And the flexibility to be able to enjoy holidays and take time off and not have to answer emails in the middle of the night. It's really hard to beat that feeling. And my income can grow, 5% a month versus 5% a year. And so that ability to compound and compound quickly is very, very addictive. Good question. I don't necessarily set myself like 5-year goals, to be honest with you. I don't view things that way. I try to stay in the present, in the moment, as much as I can. But hopefully I'm still happy, healthy, pursuing my passions, and um, yeah, maybe more financially free than I am now. Continue building up that moat, and yeah, having yeah, a lot of financial flexibility where I could pursue other passion projects. Um, maybe do some other forms of investing, things along those lines. But ideally, I'll hopefully be in the States, and maybe starting to think about a family or things along those lines. Not run a marathon ever officially. My fastest time on a half marathon is a buck 50, buck 56 or something like that. Yeah, and I've thought about that a little bit, Antonin. Um, it kind of goes back to a little bit of like right now. I love DTR, and I love the way that this business is structured because it gives me, it forces me to improve, right? That's kind of been the theme here. It makes me a better trader. If I were to open up my prop firm, I would have to be very careful with how I do that, because if everyone is copying my trades, then all I'm doing is creating a ton of leverage without very much upside for myself, right? So if everyone is taking the trades that I'm taking and I'm funding all the capital and I have 10% of the upside, I'm putting myself in a situation where I can lose everything very, very quickly. So if my objective is to continue to get better as a trader and to continue building those skills, then that kind of flies in the face of that to a certain extent, where I would have to change basically doing the stream, right? Doing the stream as transparently as I do. I would have to let people trade their own ideas, or change the payout structures to a point where it would not be very appealing for most people. So maybe at some point, but every time I think about how I would be able to do that appropriately, I can't, or I don't come up with a good answer. So for now, I like using these prop firms as a tool, but I'm not sure if I want to be the one offering the tool at the moment. Because I just think I have more value to add in this way than I do in providing the funding. Yeah, I've heard good things about Iron Man's one. For me, the stuff that is very, very appealing, like one of the best days of my life was last year. I ran the Grand Canyon rim to rim, and that was probably the best feeling I've ever had. And so I'm addicted to that sort of stuff, more than maybe like racing and stuff like that. Yeah, I've been thinking about that a little bit. SSB. Yeah, trail running. Yeah. The way that DTR is structured right now is that the way that I make money is by consistently growing the business, right? Consistently adding new people. And that's not necessarily a bad thing, but I also want to make sure that I'm not pulled into too many directions. So I haven't felt like I've reached that cap here yet, but at some point I probably will. And I'll have to reevaluate a little bit over how we set up pricing and things along those lines. just to make sure that it continues to be a net positive. Because to a certain extent, you can kind of cannibalize yourself a little bit. Whereas, yeah, if I keep growing the business, it's going to hit a number that is, say I have 2,000 people in here, right? I'm not saying that's going to be the objective, but say I do. If I want to stop adding new people, then my reason to run the stream kind of disappears because my income source fades. So I think at some point there'll be like a subscription model or something along those lines where we have a core group of people and there's a monthly fee to basically continue to have access so that it can be very tailored and focused, but also gives me upside to continue streaming. For me, the focus is still always going to be on quality over quantity. And yeah, making sure that I can provide that well to funded traders and to people who are making good money is always going to be a priority. Any other questions here, team? Do you guys have a goal for how big you want this room to be? Yeah, that's kind of the point of the daily debrief channel, Joey. For sure. So it's kind of there. It's up to people if they want to fill in their wins or not. But that is the idea. Yeah, so the problem with the Discord is because we do all the live chat through the YouTube, I think that to a certain extent cannibalizes the interaction on the Discord. Right? Because, I mean, this chat's pretty bumping throughout the day, right? We get hundreds of messages. So, you know, maybe finding a way where that could be done through Discord maybe would be something to think about in the future. But that's kind of why, in my opinion, why it probably isn't more active than it is. Because, yeah, the majority of the chatting, majority of the content is done through here. And then most people use the Discord for contacting me on a one-on-one basis. Yeah, for sure, Jason. It is on the project bucket list. But yeah, I truth be told, it's not a huge priority at the moment just because I got a lot of that visa stuff I'm going through and that takes up a lot of my time. So you know, when I do have an opportunity, it'll be something I try to create or hire someone to do. But yeah, short term, I'm being a little bit selfish here, so I do apologize for that. But next 3 months are going to be pretty hectic for me still. Yeah, hopefully by January 1st, I'll be in America somewhere. Nice, Michael. Yeah, we got to do a DTR meetup at some point. You guys all hear my voice, but you barely see my face. So at some point, I gotta get out of the shadows. Nice work, Jason. Hell of a day, man. Oh, I know, Hansel. It'd be nice if I could do that, but for whatever reason, I'm committed to doing things the legal way. Yeah, I mean, maybe if I move to California, they'll give me 120 grand for a down payment. But who knows? The places on my list are either Florida or Texas. So we'll see. As a kid, the dream I had was I was obsessed with boats as a kid. So it would be really cool to have a boat and, park that in your, outside of your house on the canal or on the water. And after a trading day, go spend some time out exploring. That would be really, really fun. I mean, Texas would be cool too. I've got a couple friends in Austin. But I don't know. I don't know if I can say no to the... I just love Miami. It sounds maybe a little bit douchey and flashy, but it's such a international city that I feel very at home there. It's the most, besides the weather, it's got the most similar vibe from like a multicultural perspective that I've found to London. And I loved living in London. I loved it. I don't know. I'm not, I don't feel very, well, so the primary reason I want to leave Canada is twofold. The capital gains tax that they've introduced here is very predatory, and I dislike what I get for that. I hate it. The 66% capital gains tax. is not very sustainable in my opinion, and I'd rather not participate in that type of socialist regime. Why not Vancouver specifically? I find for myself that I get very bad seasonal depression. I can't stand the gray. I can't stand the bad weather. And I'm significantly happier in sunshine. So I would like to, if I have control over my life, which I think I do to a certain extent, I would like to live it out in sunshine. Somewhere where, yeah, like I said, I can spend time on the water. I could spend time golfing year round. I could do things along those lines. That would be very, very appealing. Yeah, Vegas is cool, Michael. But yeah, I don't know if it's the right city for me. Augusta would be sweet, yeah. I looked into Jupiter a little bit. Jupiter would be pretty cool. But I'm a hack golfer. I'm not great. Exactly, yeah. It's got good weather. It's relatively affordable. It's all relative, I guess, but there's no place that's perfect, right? Every place has got its pros and cons. But, yeah. Can't complain about Latin girls either. Yeah, I've done the living on an island thing before, living in Guernsey. And obviously Puerto Rico is significantly different. But I hated the cabin fever you would get. Of just like feeling like you can't leave. Because if it was purely for that, I would go to the Bahamas, right? Or the Cayman Islands or something like that. But I think I'm too young to do that still. Any other questions here, team? Happy to keep answering stuff. You guys got stuff to fire out. Yeah, so actually back in the day, Jason, I used to stream all day from like 9 to 4. And two reasons. One, I was mentally exhausted. Doing the stream all day and then doing one-on-one calls and stuff like that, I ended up working a tremendous amount of hours. And I felt like I was never getting a chance to like really relax. And then what I also found was that my trading performance in the afternoons was significantly worse than my trading performance in the mornings. And so it became less appealing when that evidence kind of became like undeniable. So not only was I giving away alpha, I was also draining my mental capital much more aggressively. And for me, that's kind of like a losing combo. I think one of the big reasons why I love trading and trading the way I do is that my objective is freedom based, right? It's about owning and controlling my time. If I start to give the market all this power over me to basically be working all the time, I'm kind of giving away that freedom. And so that kind of is contrary to what my objective is. Sounds good, Juan. Enjoy your day, man. So I'm optimizing for freedom, not really optimizing for dollars and cents. And so I find that the 2 hours of trading makes me more than enough money to be able to accomplish those objectives without having to, yeah, sacrifice the lifestyle I potentially want or I'm working towards. Anything else here, guys? Yeah, this is a wild rip. Quite the fake out lower. If we can close above 19, that would be huge. I would be careful trading this time of day. This lunchtime is pretty low volume. Now, it's not terrible here this morning, but no reason to go. Damn, Rod. Is that a 43K day? Is that what you're saying? It's 100 grand in 2 days? Congratulations, man. That's incredible. Yeah, I mean, a 6K a day, Jason, or $5,500 a day. That's huge. That's $1 million a year. So, guys, final call here for questions. Final call for questions. No, my pleasure, guys. Appreciate you all being a member of the team. It's a lot of fun. So let's keep stacking up those wins, right? I feel like we've got something here for everyone. So let's keep building. Let's keep getting better, right? Let's keep improving, keep making money. No, we'll try to do once of these once a week. Yeah, maybe at some point here we can do it over Zoom where, you know, people can request to speak and share their screen and stuff like that. I'm not super tech savvy, so I'll see if I can figure that out. But yeah, we'll go through that at some point. Sounds good, David. Absolutely great day. Oh, you mean this, Rod? What do you mean? Yeah, no worries, Bergs. Have a great day, man. Oh, yeah. I mean, I'm sure I'll be able to figure it out, but we'll just cross that bridge when we get to it. All right, everyone. Well, if no further questions, then I'm going to kill the stream here for the day. Appreciate the all the questions we had here this afternoon. Good hour of some group chat. So appreciate you all. Same deal like always, right? If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. Otherwise, have yourselves a fantastic afternoon. And we'll catch up tomorrow and keep stacking up what's turning into a nice week here. So have yourselves a great day, and we'll talk then. Peace.